And family, ladies and gentlemen, walkers and guests, thank you for coming out to our inaugural Walkers Conference. My name is Seko Varner. I'm the IT guy for the Walkers. All right. So my presentation is going to deal with family and finance. Now I know that seems like an oxymoron. I mean, right off the bat, it seems like it don't match. Is that Jim in the house? Okay. Royalty in the house. Good stuff. Well, let's go ahead and get started. All right, so you can take pictures, but please don't film this. All right? I will have a version that's going to be available on my YouTube channel in about a week. All right? But feel free to take photos and definitely want you to do what you want to see. All right? So, a little bit about me. My name is Seko Varner, and with my ADHD, I found a way to monetize it. I have all those businesses up there. All right, so I have the Hampton Roads GreenBook, Generational Flip, my Positive Vibes Consulting firm. This is my Hampton Roads GreenBook. This is an online directory, and it's an app as well of Hampton Roads Black-owned businesses. All right, you can download it in your app store. You can visit the website. I would love for you to download it on your app store. A lot of different categories in there. So if you're looking for restaurants, you'll find poolside cooking. If you're looking for a doctor, if you're looking for a dentist, you're looking for a lawyer, looking for a consultant. There's right now around 2,010 of us who are in the platform, and we're looking to make sure everybody's in there. This is my documentary series. It's called Generational Flip. The idea is we're going to do something very different than the previous generations. We're going to do a flip, and we're going to have some very different outcomes. And the reason that I've done this is so we can build the mentality for health and wealth in our families. So you can go to generationalflip.com. You can also find it on YouTube as well. So the other two things I do, I started off really in elementary school, middle school with a disc jockey company. So my firm is Positive Vibes Incorporated, and all the things that I've learned all these years, I've kind of wrapped that into a consulting business. And we deal with real estate, we deal with entertainment, we deal with business and funding. So that's all a little bit about me. I know that you did not come here to learn about me. You came here to learn how to blend family and finance. Trust me, we're going to get there, all right? So, first of all, everyone say, it depends.
It depends.
It depends.
It depends.
So, you're going to have some questions in your mind, and there's no hard answers. It's always going to be, it depends. It depends on a lot of different factors. So, there's no easy answers. Are you going to make money? Is your family going to get along? Is this going to? It all depends. So I can't give anybody a strong, solid answer in that regard, right?
You will be wealthier. What I'm going to bring you through are the 6 levels of creating generational wealth. The path to creating generational wealth is owning your business or owning real estate that pays you every single month to own it. So at each level, I want you to have one objective. The goal, the focus of level 1 is I want you to become what we call a thousandaire. Basically, we define a thousandaire as a person that's capable of creating a business that makes at least, at minimum, $100,000 a year. At level 2, the situation changed. You're in a position where you're not living paycheck to paycheck, right? At level 2, you're supposed to live the rent-free lifestyle. What I mean by that is basically your living expenses should be paid by another tenant, right? At level 3, the fun happens. The magic happens at level 3, right? So level 3, we're gonna do some really incredible things. We wanna do one thing. We wanna have really good personal credit. You want to bring your personal credit score to 720. When you get to 720, we want to lock it, right? And we begin to live exclusively through our business. Yes, that means you'll have to set up an LLC, S Corp, C Corp, whatever. It's just a separate legal entity. It could be an LLP, it could be a nonprofit even. Everything you do should be a tax write-off. At level 4, what I'm talking about is I want you to go out and get $1 million of good debt, buying assets that pay you to own them through your business. That is the safe way to do it. At level 5, something incredible happens. you've gone from a thousandaire to a millionaire. And that's what we do, right? At level 5, you actually become a millionaire, right? Because that's the point at which the assets you own should actually, minus the liabilities, mortgages and everything, minus those, should actually equate to at least $1 million, which technically makes you a millionaire. The goal of level 6, the objective is put your family in a position where you can pass wealth on. We must set up structures that allow us to pass wealth on. My name is Donahue Baker. Thank you so much for being a part of this journey.
And that's just a little bit from episode 1 of Generational Flip. Once again, that's to set us up with the mindset so we can build wealth, and then we can get with our family and we can build wealth together. You can find that on my YouTube channel. You can also go to generationalflip.com and watch it ad-free. On YouTube, you want to watch the ads.
The concept of legacy banking is really about using resources in a different way. So let's talk about it. The self-directed IRA rules and regulations have been in the tax code since 1974. I took the information, took the research, and built a legacy bank, a banking strategy that receives outsized returns based on something that I had some familiarity in. We finance real estate investors as they purchase houses to renovate, flip, and sell. We loan them the funds at 10, 12, 14% interest, higher than what the bank would normally offer them, but it's for properties that cannot be financed in the regular commercial market. And then in 6 months, we do 6-month deals. We have a return not only on the interest, but on the fees, associated fees, which tend to be about 1 or 2% on each one of those deals. So at the end of 6 months, we have the opportunity to have returns on our investments of 12 to 14%. And if we're fortunate, we can turn that money twice a year. Twice, 2 6-month loans. Therefore, we're talking about 24 to 28% interest per year. The legacy bank really looks like this. For every $100 that we lend out, $113 comes back. We used IRA funds that were just sitting there in a normal mutual fund, getting 5, 6, 7% if we're lucky. We took those funds out and created our own bank. And after that, we invited other family members to ride along, because all you need is one person to have the bank, and then others can ride along. So if you had a magic machine, think of it as a shoebox. And if you could put $100 in the shoebox, close the lid for 6 months, and when you come back, there's $113 in there, how many times would you put $100 in? I would argue as many times as you can get your hands on $100. So that's what we've done. We tell our family members, and we've said, how many $100 do you have access to? And we go to market together.
We go to market together. So as you can see, there are ways for us to work together with family to create our own banks, create our own investment groups. And I'm going to show you how our family did it, all right? So once again, generationalflip.com, that's where you can help your family build that mindset that will help them as you move towards achieving wealth and also improving one's mental health. It's so important, yeah. All right, so here are the steps. The steps are pretty easy, but they're nice steps. So you got to invite some folks. But everybody can't play. You can't bring everybody along, right? You have to develop a group mindset. You have to consider some management platforms. Create a legal entity. Fund your entity. Open entity accounts. hold scheduled meetings, vote on the investments, track profit and losses, and file taxes. You can find people like Deidre Moon firm to do that, right? Those are the simple steps, and if you follow those simple steps, you can do what my family did. And we have an investment group, and we meet once a month. We invest our money together once a month. That's the platform strategy we have. Once a month, we put in some money, and then we decide on what we're going to invest in. And so we do stocks, we do REITs, we do startup companies. You know, we do a bunch of different things, and you can do the same thing too. Your family can do the very same thing too. This really could be your family. So, let's talk about the membership. Once again, everybody's not invited. We have certain aunts and uncles. They might pray for us, they might support us, but they ain't rocking with us. They're not going to get, and we did not invite them. We have some cousins, I love them, but they're not going to rock with us on this at this point. Later on, we may bring them in, all right? So everybody doesn't have to join at the very beginning. People can come in 5 years later once they mature, or once your organization is mature. Look, all of us have those family members who really are uncomfortable when things aren't perfectly organized. We don't bring them in at the beginning, we bring them in later. All right? Because some people just can't handle it, right? All right, and consider those who have disposable income, because you don't want to have people in the investment group who can't invest, right? And that's a hard conversation to have with some family members, like, yo, cuz, you can't pay your rent. Why don't you, get your way up and get us back later on, right? So everybody who supports you doesn't have to be members of the organization. Does that make sense? All right, developing the group mindset. That's one of the important things. How do you do that? Read books together, watch videos together, develop preliminary rules. Just sitting down and making those rules, you actually start bonding together. It's an amazing thing. Discuss their risk tolerance. My wife's risk tolerance and my risk tolerance are totally different, Mars and Pluto or whatever. Whatever, Mars and Venus, whatever they call it, right? Meet with professionals together. As a group, we've met with 1 or 2 professionals in a Zoom meeting, just so we can all be on the same board, right? We have events that we plan together so we can bond. We started to really develop that group mentality. And one of the important things is an investment thesis. That's saying, we're going to invest in this, we ain't investing in that. We can get with this, we can't get with that, right? Like, for instance, my cousin is involved in the federal government. She can't get involved with investments that involve cannabis. So, all right, consider management platforms. We use a platform called TribeInvest.com. We're still using it. We've been using it now for about 3.5 years. We may move to a different platform. There are a plentitude of investment platforms. You just have to find the one that's going to work for your style, for your group, for your organization. You can also use Excel spreadsheets. If you have that Deidre Moon in your family, you can kick her off a little money, or maybe she may volunteer as being part of the investment group to do the management part, which simply means finding out where all the money's coming from, assigning a name to it so everybody has their equity, and you know what your cap table is. You also want to have document storage, you want to have voting ability, you want the ability to manage the voting, you want the managing contributions listed, and you also want to have a way that you only talk about entity-specific things. So the TribeVest platform is the one that we chose. That's TribeVest.com. We actually invested in TribeVest.com as well, so we use it and we're investors. But there are some other ones out there as well. Create that legal entity and talk to your CPA, talk to your lawyer, find out which entity strategies will be best for you. We use TribeVest, and the TribeVest model was to create a LLC using their platform, right? And then You create the operating agreement, the articles of incorporation, and it does all of that on one platform. But you need to create that legal entity. All right, you gotta have that legal entity. You're gonna need that. It's very important. Deidre just talked about that. So also keep in mind, some of these documents are called living documents. In other words, they can change. You can have one document one day and you can make a tweak on it a week from now. So as you and your family are working these things out, don't get so wrapped up that it has to be your way or the highway. Because you might find out later, or they might find out later, that they may need to change course with some of the decisions that were made. So these documents are living, breathing documents. They can change at a moment. And like Deidre said, you gotta get that EIN. I'm so glad you did that part of the presentation before I did. That made a lot of difference. Funding your entity. All right, that's really just adding funds into your business. We began by all the members cash apping me some money. Actually, we use PayPal. They sent me some money, I opened the account, and then we started using TriVest, which allowed us to do all the other stuff. However, once you start your business, you want to have a better system than some of the fintech strategies. So you might start off with a Cash App, but you don't want to run your business with Cash App. Not at all. Too many limitations, too many problems. The fees are actually exorbitant. So you might say, I don't pay a fee on my Cash App. That's because that's a personal account. Once you have a business account, you're going to pay the fees. They're going to take their money. So you might start off with fintech to get things started, but decide if you're going to do a one-time contribution. Everyone might throw in $1,000, $5,000. Or you might do every month, everybody kicks in $150, $200, $75, whatever your group decides. So you have to fund your entity. And don't overthink it. Don't overthink it. Keep it simple. And then you need to make sure you have a banking account for that, right? You're going to have a bank account. You're going to have a brokerage account. A brokerage account is for stocks. You know, your stocks and bonds. You're going to Fidelity, those types of places. So that's your brokerage account. You're going to have one or two banking accounts depending on what you want to do, right? And then you may have some platform accounts like Start Engine. We have a certain amount of money we keep on Start Engine, so if we see an investment that we want to get involved in Start Engine, the money's already there. So you're going to have those accounts that you're going to set up. Let's see. Once again, don't overthink about it. Keep it simple. Some platforms are going to require a wet signature. So that might mean that you have to mail documents from one family member to another to make sure that everybody signs it with an actual pen. But that's okay. That's okay. The companies that make you do that actually are better suited to protect you than some of the other companies that do things digitally. All right, so then the process, you're going to hold scheduled meetings, you're going to vote on your investments. One of the things that's been really intriguing for us is we've all become a lot more proficient at pitching investments. So you might think that Starbucks is a great investment. Prove it. Show me the numbers, show me the receipts. Demonstrate to us that it's a good investment. We've become really proficient in finding investments we were passionate about and presenting them to the group. We had to pitch them to our group. That's part of the process of growing, and actually, you learn more about these businesses when you're doing your research. That's one of the great things about it. You want to track your profit and loss. Our treasurer does an excellent job of that. And you gotta file taxes. You gotta file taxes. You gotta file taxes. Am I moving too fast? Okay. All right, so you can invest in multiple opportunities. So you can give loans to other businesses. William Randolph, the gentleman that was in episode 2 of Generational Flip, we talked about his legacy bank. They loan money to other businesses. His family loans money to other businesses. You can also do REITs, which are real estate investment trusts. if you want to get into real estate, I really think, this is my personal opinion, that REITs are the safest, lowest risk way to get into profiting from real estate. Because Terrence will own a bunch of apartment complexes, and we invest in Terrence. He already has a team in place. They're already kicking people out who don't pay, right? They're always keeping the place clean. New people want to come to his apartments because it's very attractive, everything is done right, So we want to invest in people like Terrence. He kicks us off a little bit of money every month. We invest a little money every month. It works out. That's how a REIT works. There's some other stocks. You can invest in stocks. One of the great things about stocks is you become a part owner. And ownership brings power. So this is just a quick picture of an experiment that I did, and then my family's investment group got involved in. I just popped in $1,000, and a few years later, we got some gains. It turns out to be around 7.8%. Not a bad return. It's not sexy, but it's not a bad return. But I also know that if I invested more, it would be real sense.
That will pay you monthly income. Now, a REIT is a real estate investment trust where you, the everyday person, can own stock in real estate companies that own, operate, and manage commercial real estate. Now, when you buy a REIT, you are not looking to flip your money. You are looking to build a passive income. The first REIT that pays out monthly is Realty Income, ticker symbol O. Realty Income focuses on recession-proof type tenants like Chipotle, Walgreens, Dollar General, Dollar Tree, and 7-Eleven. This company has been around for a very long time, but they are less than $100 a share. The second REIT is Stag Industrial. Now this is an industrial REIT. They own different types of warehouses. Their tenants are companies like Amazon and FedEx. This REIT is less than $50 a share. So do your research and decide which REIT is going to help you build your passive income portfolio.
All right, she does a better job of discussing REITs than I do. If you're interested, Ashley Fox, you can find her on TikTok, on YouTube, you can find her on Instagram or Facebook. She drops jewels. And that's part of building the mindset, is making sure you surround yourself with content that gives you the goods that you can bring back to your family, so you and your family can be even more informed about some of the opportunities out there.
REITs. A REIT is a real estate investment trust. In the beginning of this video, I talked about how you can generate cash flow by being a real estate investor. The problem with that is you need a lot of money to start, you need to have all the connections, you got to go through the headache and go through all the work of actually owning and managing your own property. Well, when you invest in a REIT, a real estate investment trust, now you're investing in a company that invests in the real estate. And the reason why some people like investing in REITs for dividends is that REITs are required to follow the 90% rule, which says that the REIT is required to pay out 90% of their taxable profits to their shareholders, people like you, in the form of dividends. And that's why some people get attracted to REITs, because it's kind of like investing in real estate without actually investing in the real estate. I'm going to go over a few examples, but I'm not a huge fan of REITs because I also invest in real estate. I would much rather own the real estate because when I own the real estate, it's something that I can control, I get the tax benefits, and it's mine. But that's just me. Other people love REITs, so let me show you what that looks like. For example, VNQ is an ETF created by Vanguard. This invests in office building, hotels, and other real property. At the time of recording this video, has a 3.6% annual dividend. SCHH is the fund created by Schwab. This is an ETF that invests in a broad range of other REITs. So this fund is investing in a broad range of real estate investment companies. This is currently paying out a 3% annual dividend. And then we have XLRE, which is a fund that invests in development companies, management companies, and other broad real estate investment companies as well, which is currently paying out a 3.2% yield. So let's do some math. If you wanted the $50,000 today, you would have to invest $1.38 million into VNQ, $1.67 million into SCHH, and $1.56 million into XLRE. Again, the goal isn't to have the $1 million today, it's to slowly work your way there, because if you know this is your goal, now you can start attacking. You put some money aside to invest every single month. As you get a raise, you invest more money. As you start to get paid the dividend income, you reinvest that money. And the nice thing is, if you invest your money into a good investment, the value of investment goes up, and the amount of money you get paid in dividends goes up as well. But I got it.
All right. Here's another one of my favorite content creators that deals with investments. So Minority Mindset, you can find them on YouTube primarily. This is the kind of stuff that we share in our group to make sure that we're constantly learning. And that's one of the important things when you're working with a family investment group. You constantly want to build that mindset. So just to go over the steps again, you invite the members, you develop a group mindset, and hopefully I've done a good job of explaining how important that is. You're going to consider management platforms, you're going to create a legal entity, fund your entity, open entity accounts, hold meetings, vote on investments, track profit and losses, and file taxes. That's the simple strategy to set up your family investment group. I want to give a few warnings before we go forward, and these aren't necessarily for the family investment group. This is just good junk in general, all right? Don't use your personal credit after you get business credit. Don't use your personal credit after you get business credit. So if you're a business owner, and the reason I can say this in this room, because the Walker business leaders, we look at people who are involved in business, not-for-profit, entrepreneurial type stuff. So most of the people in here are involved somehow in a business. And the good thing is, if you have a family investment group, you have a business. All right. Second thing, don't co-sign for anybody. Not for your wife, not for your husband, not for your mother, not for your father, not for your uncle, not for your children. Don't co-sign for anybody. You can give them the money. You can help them with the situation. You might make them an authorized user on one of your accounts to boost up their credit score, but don't co-sign for anybody. All right? Other thing is don't enter partnerships or joint ventures without a contract. I've made that mistake too many times, paying for it now. Don't go it alone. There's safety in numbers. Always seek to protect yourself. There's going to be business gains. There's going to be profits, and there are going to be losses. But that's all part of the game, all right? So, if you have any thoughts, comments, or questions, you can use the QR code. Reach out to me. I'd love to hear from you. Love to answer any questions, give any guidance that I might be able to give. Hopefully this makes sense to you. I know it was kind of quick. I had to do everything in 20 minutes. But the key is all of us can get our family, our church group, our synagogue group, our EFI group, whatever, our fraternity members, our line brothers, our line sisters, the people that live on our block. You can find your group of people who are like-minded, and you can do this. And people who are wealthy are already doing this. The Rockefellers, they're doing this. The Obamas, they have family banks. Open yours.